I remember the first day my stock portfolio went over $100,000. I thought, wow, as long as I keep adding a couple $100s into my portfolio every week, it should only be a matter of time until I reach 200K. Nearly 1 year later though, one of those predictions did come true. I kept adding and buying dividend stocks every single week, but my portfolio value is now about to drop under 100K. That's how much the stock market is down. Now, I can get all upset and say I'm done with investing, but a good investor knows this is actually the best time to build wealth. We can get our hands on fantastic dividend companies that have a history of success and lock in some of those high starting dividend yields. I got 3 dividend payers I've been buying myself and wanted to put on your radar, so let's get into it. Getting rich off the hotels. Stock number 1, Vici Properties. How do we win in Monopoly? It's simple. Own the red hotels. How do we win the money game in life? Simple. Just own Vici Hotels. Vici is a real estate investment trust, and buying into this company means that you are now an owner of nearly 59,000 hotel rooms, 43 casino-type gaming facilities that total up to 122 million square feet. They also own 450 different restaurants, bars, nightclubs, and sports books. Now, Vici doesn't actually own the businesses that I talked about, but they actually own the land and the buildings that these casinos operate in. Vici does most of its business in Las Vegas. About 55% of their revenues come from the Las Vegas metro area. And luckily, what happens in Vegas can go straight into your pockets, as Vici has a strong starting dividend yield of 5.3%. Every time somebody books a stay at one of the premier hotels such as the Venetian, MGM Grand, Caesars, Luxor, the Mirage, and so many others, that's money in your pocket, as Vici owns the real estate that is associated with these hotels. Vici actually just closed in on this merger with MGM Growth Properties, giving them an even larger portfolio to make money from. This merger adds 33,000 hotel rooms and nearly 4 million square feet of convention space to an already impressive portfolio. Vici actually collected 100% of rent during C19, which shows they have excellent liquidity with their tenants. I expect this to continue as they have decade-long agreements with many other tenants, which to an extent at least have some sort of inflation protection. Analysts have this company as a buy rating with 0 sells. That's why I currently own 37 shares worth about $1,000, and I earned $53 every year for doing absolutely nothing. Hope you guys are enjoying the content so far. Make sure you hit that like button and are subscribed before I get into stock number 2. Invest in the Ponzi. Stock number 2, JP Morgan Chase. Now, I know big banks might not be everyone's favorite sector, but there's no denying how profitable they can be. We store our money at these banks, might as well get paid to own the banks. Chase is the largest bank in the US with $2.6 trillion in assets. Chase provides so many services that we need in our everyday lives. Whether this is checking, cash management, payment solutions, they manage other people's wealth. They're involved in credit cards and mortgages, auto loans, business loans, etc. Chase is now near its 52-week lows, and they offer a really strong starting dividend yield of nearly 3.4%. While the financial sector will probably continue to get clobbered during this upcoming recession, I still want exposure to Chase because just look at how well they rebounded after the 2008 recession and the C19 downturn. Chase services make the world go around. I can't imagine they're going to be stopping anytime soon. Chase has a long history of paying dividends, well over 25 years. Chase should be able to make even more money as interest rates rise. Their CEO, Jamie Dimon, says that rates could be considerably higher than what the markets are actually expecting. If the Fed hopes to cool down inflation anytime soon, they gotta raise those interest rates. Currently, I own 18 shares of JP Morgan Chase, worth about $2,200 in equity, and I'm dripping in $72 every year for doing absolutely nothing, and Chase is sending me those dividend checks. Invest in the coffee addicts. Stock number 3, Starbucks Coffee. One of the most reputable brands in the world is down 50% from its 52-week high. Starbucks is such a high-quality company, their CEO has volunteered to work for a whole $1. This is a job that would normally pay in the ballpark of $15 million. Now, Howard Schultz, who has worked as the CEO before, he wants to return this company to its former glory. More and more people stop by a Starbucks, but not necessarily just to chill or to Netflix, but to grab their coffee and head out. 2/3 of their orders now occur in the drive-thru lane or on the app versus just ordering at the front counter. Starbucks has now announced 90% of their new stores will have a drive-thru, which will also incorporate new store designs and technology. Starbucks, of course, has a very loyal customer base, as rewards memberships were up 17%, now standing at 27 million members. And customers spent $11 billion in gift cards last year, with $1 billion not yet even used. It's acting like an interest-free loan for Starbucks. Now, of course, the real reason Starbucks stock has been collapsing is the fear of unionizing. But I thought their CEO had some interesting ways to crack down on that. They announced new benefits, expanded training, improved sick leave, and credit card tipping. But get this, it's only for the stores that are not unionizing. The Starbucks union is of course saying this is not legal, but we will let the courts decide on that. Overall, I can't see this hurting Starbucks too much in the long run. With its recent slump in share price, Starbucks now trades for a 2.8% starting dividend yield and a PE ratio under 20. I like to think of each of my Starbucks shares as a little mini franchise that works for me. So currently I own 23 shares for about $2,000 in equity, and I make $46 in dividends every year, and that's constantly growing as I continue to add more shares of Starbucks. I'd like to hear about the stocks that you're currently buying in this most recent stock market downturn. Now these videos, they do take a lot of time for me to research and put together. Please make sure to hit that like button if you've enjoyed it, and make sure to join the channel for more dividend updates. My videos are always found in podcast form under the Collect Cash podcast name, and I will buy, stash, and collect cash you later.